So let's get Aloke Kumar Banerjee, the Director of Finance at ONGC, who joins us now. Mr. Banerjee, good morning. The Finance Secretary has said that diesel will now be made market-driven very soon. Do you think that's a realistic assumption, and what impact do you think it would have on upstream companies if the overall subsidy burden comes down?
I think it has a major impact on the international price also. Today we are in a very comfortable position that crude price is coming down. This is one part, and also this is medium term or long term. Crude price also it is about less than $100 per barrel. So from that angle, I think government can continue with this, at least as far as diesel is concerned. Until there is a major oil shock, which is perhaps not very likely today in the market. The oil market world over has matured enough, and so we feel that it may be possible, but at the same time with that contingency that if there is any major oil shock, then there may be some rethinking may be required.
Okay, so to follow that point then, Mr. Banerjee, the worry during the UPA regime was that any cut in under-recoveries will be used by the government to address its own fiscal deficit, and upstream companies would continue to finance the burden. Has the new government given any signals of a change in that stance?
In fact, for the last quite some time, we have been requesting government to review this subsidy mechanism, because today what is happening now is $56 per barrel they are deducting, and as well as because of condensate consideration, ONGC's net subsidy is coming almost about $62–63 per barrel. As a result, our net retention price is squeezing, and at the same time, as you know, the cost of production is increasing day by day. So keeping this in view, we have already represented to the government that we need a better price so that our retention is sufficient enough to take care of our exploration and production, as well as overseas acquisition also, because we have to somehow support our overseas acquisition through OVL. So I feel that, and government has also conveyed that they would look into this aspect with all this consideration, and we feel that with the reduction in the under-recovery, overall under-recovery drastically, we can definitely expect a reduction in our oil contribution to the under-recovery or discount, whatever you say. So definitely we are optimistic.
All right. So what kind of realizations do you think would be fair? I know you want $65 a barrel, but that's not possible in the current scenario. So you're currently making about $41. What kind of realizations is a realistic assumption?
You see, this oil price, like oil operation is something very peculiar. Now, in some of the fields, the production cost is quite high, while some of the fields is quite moderate. Now, some of our fields, like these marginal and small fields, there the production cost is more. Even we are now existing fields also, we are going for IOR and EOR schemes for enhancing the production, and there also the cost is increasing. So we have already requested government in that cases our price should be remunerative enough so that we can even go for production. In some cases, until we get a remunerative production, our production will not be remunerative at all. So even break-even price also, we need a certain level which is far as more than what we are getting today. This is one aspect. As far as even general this existing production from the existing field nomination blocks, there also the retention last year, as you know, it was abysmally low. This year, so far, it is last quarter it was about $47. So we feel that we need some. This is may not be sufficient enough for our long-term all these capital projects. As you know, we are going for two major capital projects. One in East Coast, 98/2 development, and the other one is the West Coast. It is Daman development. So these two fields will require quite a substantial investment. So naturally we feel that we need sufficient retention for deployment of funds for these development programs.
Okay, so if I heard you right, you said you need more than $47 realizations for your long-term capex, but if you are promised $60, can you assure that you would ramp up production significantly so that reliance on imports is lowered?
Definitely, this is, you see what happens is oil and gas, is hydrocarbon production. It is not that very import-output relation is also very, very uncertain. So what we are telling government now that if we give us the remunerative prices, then some of the fields which are not in a position to be developed with the existing price, those can be put in the stream of production. And there, although those fields are not very major fields, these are minor, small fields and marginal fields. But in addition, as I told you that we have two of our major projects, basically gas, we are expecting more of gas projects, both one in East Coast and the other one is the West Coast. These two fields are definitely going to add a substantial gas production to our domestic gas production, and which will go a long way to meet our energy demand. And although this production is expected to come from 17-18 onwards, as you know, these projects are gestation period also quite substantial because they both are in offshore, and particularly in the West Coast, it may come, the Daman field, it will come, we are expecting it by 17, and we are expecting a production of about 10 million standard cubic meter per day gas production, while in the East Coast, 98/2, we are expecting gas production of the order of 25 to 30 million cubic meter of gas per day. Plus we are having some oil production also, we have got some oil also there. So we are expecting that these two fields will add a substantial amount of oil and gas to the domestic production.
Okay. Are you disappointed, Mr. Banerjee, with the back and forth on gas prices, and where do things stand right now? Have you factored in any increase in gas prices yet?
No, actually we could work out that only the impact of the gas price hike on our this bottom line or top line. But as far as this how much will the gas price increase, you see what happened, this is purely a government decision. Government will decide it. Now earlier government took a decision and decided to follow a certain formula, and as per that formula at that point of time the the price would have been about $8.4 per MMBTU. Today this new government, definitely it is quite expected that definitely they will look into the entire process and the interest of the other stakeholders, and it needs time. So I feel that this may take some more time, but at the same time what is the most positive for us, that there is an upside because production, this price should definitely increase, but only in the time and the extent. So that will be anybody's guess. But as far as we are concerned, we have the upside, and we feel that I think maybe this calendar year or any time we can expect. But at the same time, I am not in a position to comment on that when it will come and how much it will come. But definitely there is an upside for ONGC because of our gas production, quite a substantial gas production by us.
All right, we hope to see that higher production level come in from ONGC. But finally, as of now, what do you think will be your overall subsidy burden for this year? Will it be the same as last year, or do you see a significant reduction in the subsidy burden for ONGC?
You know what happens normally whenever we calculate any profitability, anything, so we go by the most conservative basis. But I feel that the way this under-recovery, if you see the background of this under-recovery, it started sometime in 2003-04, and it started because of the under-recovery because of those petrol, diesel. That time petrol was also subsequently put in the subsidized product. So diesel, LPG and kerosene. And because of that under-recovery only, this subsidy issue came. So subsidy is a product of those under-recoveries. And now over the years subsidy increases because of the under-recovery also increases. Now today under-recovery has come down and is likely to come down further. One is because of the government's number of measures like diesel price rationalization or increase, whatever you call it, then LPG rationalization, and on the top of it, that is crude oil price reduction. So as a result, if the under recovery is coming down, definitely subsidy is likely to come down. Only thing that, okay, as you are telling in the first comment, that this government will take the first whatever direction is there, government will take it for their budget deficit, etc. But I feel that definitely this, you see, already it was 161,000 into financial year 2013, then 14 it was 139,000, and now this year it is expected to be in FY15, it is expected to be in the order of 1 lakh crore. So definitely this 60,000 reduction in a span of 2 years, definitely we can expect some reduction, and government has already conveyed that they are considering our proposal that to reduce this under recovery burden on us. So we are definitely hopeful, and I feel that the investors also would also consider and this aspect while investing in ONGC script.
All right, Mr. Banerjee, we leave it at that. Thanks so much for joining in. In fact, good tidings for ONGC. The stock is up close to 2% odd.